Hello and welcome back to the Geordie Pick Invest channel, where we delve into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights, and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you one dividend at a time. In today's video, I'll be showing you what I think is the best 5 ETFs you can buy in 2025. An ETF, also known as an exchange traded fund, is a type of investment fund that holds a basket of assets such as stocks, bonds, or commodities and trades on a stock exchange like a regular stock. ETFs offer diversification, liquidity, and typically lower fees than mutual funds. They can track an index, a sector, or a specific investment strategy. You can buy and sell ETFs throughout the trading day at market prices, making them a flexible investment option, and I'll show you what I think are the best 5 ETFs on the market right now. So I've looked over many different ETFs, and the way I'm ranking the top 5 is through total returns over the last 5 years. I think this is the fairest way to do it, as it's a good amount of time for the ETF to prove itself, and I'm even including the 1 and 3 year returns of all the ETFs in the video. So if you prefer different time scales, then you can look at other ETFs and potentially invest in other ones. But it's important to remember, past performance is no guarantee of future result, so please do your own research before making any decisions. Let's have a look at the first ETF in the video. It is none other than the Invesco S&P 500 ETF, ticker symbol SPXD. The Invesco S&P 500 ETF is an exchange traded fund designed to replicate the performance of the S&P 500 index, which represents 500 of the largest cap US stocks. It was launched in October 2015 and it is based over in Ireland. We can see on screen that it has a share price of $55.69 and has a very good expense ratio at only 0.05%, has a dividend yield sitting at 1.55, and they pay that dividend on a quarterly basis. The top 3 sectors within this ETF are technology at 32.4%, financials at 13.9%, and healthcare at 10.8%. The top 3 holdings within these sectors are Apple, currently sits at 6.9% of this ETF. You've then got Microsoft at 5.72% and Amazon slightly further down, but at 3.3% of the ETF. If we then have a look at the 1, 3 and 5 year returns of this stock, you can see they had a 33.83% return over the last year. Over the last 3 years, they've returned 44.05%. And over the last 5 years, they have returned a massive 115.06%. And in the last 6 months, if we have a look at the graph, you can see that they have performed pretty well, being up 14.96%. The objective of this fund is to provide the total performance of the S&P 500 index. It employs a synthetic replication strategy using swaps to achieve this objective. Due to this, you should be aware that SPXD involves counterparty risk, as does all the funds in today's video. But this fund has performed very well over the last 5 years and is one that I personally am a really big fan of, and I do have a holding within a very similar S&P 500 ETF in my own portfolio. Next up on the list, we have L&G US Equity ETF, ticker symbol LGUG. This is an exchange traded fund designed to track the performance of the core United States large and mid cap index NTR. This index measures the performance of large and mid cap publicly traded companies in the US. It also has an expense ratio at only 0.05%, and they are currently £19.28 per share. They don't have a dividend yield or dividend frequency, and the fund size is currently at 800 million. The top 3 sectors within this ETF are industrial at 28.4%, technology at 26.3%, and financials at 14.6%. When looking a little bit deeper into the holdings, you can see Apple is also top on this stock at 6.9%. Nvidia comes in at second at 6.41%. And you've got Microsoft just in behind at 6.32%. Looking into the returns for this stock, over the last year, it has returned 34.02%. Over the last 3 years, returning 42.46%. And over the last 5 years, returning 115.8%. And over the last 6 months, it has performed slightly better than the first stock, being up close to 20%, as you can see from the graph. This stock has just outperformed the S&P 500 fund, but only by 0.7% over that 5 year period, and it's actually slightly behind when comparing it to the 3 year period. Personally, I prefer to stick to the more well-known S&P 500 fund over this one, but that's for you to decide. Next up, we have the ETF that comes in at number 3 on this list, and that is none other than the UBS Factor MSCI USA ETF, stock ticker UC99. This has a share price of £42.94, was launched in 2015, and does actually have a dividend yield at 0.65% and pays it semi-annually. They do have a slightly higher expense ratio at 0.25%, and this ETF aims to replicate the performance of the MSCI USA Quality ESG Low Carbon Selection Index. This index focuses on large and mid-cap US companies exhibiting high-quality characteristics, strong environmental, social and governance profiles, and lower carbon emissions. If we have a little look at the top 3 sectors, it is massively weighted in the technology sector at 52.2%, has a 14.2% allocation to industrial, and a 10.2% allocation in healthcare. The top 3 holdings within the ETF are Nvidia at 8.55%, you've then got Apple at 8.36%, and Microsoft at 8%. Total returns on this particular stock are better than the last one over the last 5 years, being at 118.86% returns. It then has a 3-year return at 43.44% and a very healthy 1-year return at 31.61%. Over the last 6 months, it's actually up only 13.63%, so compared to the 2 ETFs, it is actually slightly down, but still up a very healthy amount for a 6-month period. You can see that this one has actually outperformed the other 2 over the 3 and 5-year returns. And I personally have this ETF in my Invest Engine portfolio as one of the bigger holdings. I really like how it has performed since inception. I also don't mind the heavier focus on tech sectors, as I have a long time in the market and I believe having that risk with the tech can pay off over the long term. However, you do need to be aware of this sector concentration and how this can lead to volatility, with it being very much a higher portion of the portfolio. The ETF that comes in at number 2 is none other than the Invesco NASDAQ 100 ETF, ticker symbol EQQQ. This ETF is designed to replicate the performance of the NASDAQ 100 index, which comprises 100 of the largest non-financial companies listed on the NASDAQ stock market. If we have a little look, its share price is currently £428.42. It was launched in 2002, has an expense ratio at 0.3% with a dividend yield currently at 0.36, and that is paid out on a quarterly basis. The top 3 sectors within this one, again quite heavily weighted in the technology sector at 39.1%, industrial just behind at 37%, and consumer at 11.1%. The top 3 holdings within this ETF are Apple at 9.8%, you've then got Nvidia at 8.6%, and finally Microsoft at 8.1%. If we have a look into the returns of this particular ETF, again slightly performing better than the last one over the 5 years, being up 134.22%, and the 3-year returns still being very healthy at 43.38%, and the 1-year returns at 35.38%. Over the last 6 months, this stock's performed very well at being up over 21%, as shown on the graph. This ETF is very similar to last fund in that it has a big overweighting to mainly tech stocks. You can see the top 3 holdings alone account for 26.5% of the entire ETF, and if you put up with the more market fluctuations and volatility and have a long time horizon within the stock market, then this is another brilliant choice. Over 130% gains in only 5 years is fantastic, but to see returns similar in the coming years, you have to be very confident on the overpowering tech stocks. The final ETF in this video is going to be the iShares S&P 500 Information Technology stock ticker IITU. This comes in at number 1 due to their phenomenal 5-year returns, which you will see in a minute. But first off, let's have a look at their share price being £26.09. They launched in 2015, have an expense ratio at 0.15%, and they don't have a dividend yield or frequency. This exchange traded fund is designed to replicate the performance of the S&P 500 capped 35/20 Information Technology Index. This index includes US companies from the S&P 500 index that are classified under the information technology sector, with a cap on the weight of any single constitute to ensure diversification. Looking into the top 3 sectors within this one, there's no surprise the top one being technology at 55%. It then has industrial sitting at 40.4%, and financial massively behind at only 0.3%. The top 3 holdings then are Apple at 22.53%, Microsoft sitting at 17.22%, and you have Nvidia at 16.67%. Now to reveal the returns on this particular ETF, the 1-year return being 45.72%, 3-year coming in at 71.59%, and the massive 5-year total returns being a whopping 168.24%. Over the last 6 months, also performed very well, being up 16.79%. As shown on the graph below. This ETF has massively outperformed the other 4 stocks that I've been through today over the 5-year period. But you have to be extremely committed to the process if you invest in this particular ETF, as the volatility is by far the highest. This ETF is mainly focused in the technology sector, so if this has a bad couple of years, then you will be more than likely have poor returns. As well as this, the top 3 holdings alone are over 50% of the portfolio, so definitely something to bear in mind. On the flip side, the technology sector has had a brilliant past 5 years, hence why this is the standout ETF for 2025. Will the technology sector continue to perform as well in the future? That's what you have to decide for yourself. Remember that past performance is no guarantee of future result, and please make sure you do your own research before buying any stocks on the stock market. Thanks for watching. If you're building a portfolio for passive income and financial freedom, don't forget to like, subscribe, and hit the bell notification so you never miss an update. Will you be looking to add any of these ETFs to your portfolio? Please share your thoughts in the comment section down below. Until next time, keep compounding and stay patient in the market, because your future self will thank you. This is the Geordie Pig Investor, over and out.